Yo, uh, what's up, guys? Welcome back to my YouTube channel. And in this video, I'm going to clear some air. Many guys have been texting me and mainly about the strategy, you know. And I think something to clear the air about is how to find the right zone, you know. So stick with me in this video as I'm going to be dissecting, you know. I'm going to be throwing more clarity on how to find the zone. So basically, there are three things that you need to know. When you look at the chart like we are doing right now, there are three things that you need to know. The first thing is you need to be able to identify the current trend. So, for instance, we are going to take, for example, as price was moving through this whole cycle, how do you identify what trend is the market on? Like now here, how do I know that what is the market doing? You know, that's the first thing that you need to know. You know, and it will help you anticipate the next move. So the first thing, like I've broken down, is to how to identify the trend. The second thing is looking for the zone. You know, which zone are we going to be using to take off our trade? And lastly, the last thing is going to be to take the trade. You know, where do we take the trade? So without further ado, let's go into it. Looking at this chart, we can clearly see that the market is in a downtrend just because price is going down. But how do we have, like, the process to it? So the number one thing that we always use to determine the trend, you know, visually it can be seen going down, but technically what we use is structure. So every time price is for instance, price prints a low, and it breaks it, that means we're in a downtrend. You look at, we had a bit of a low here. Even this was a low. Price breaks it and goes lower. We have this low. Price violates it, continues lower, and equally we have all of these lows. You know, each low that you see gives a clue of where the trend is going. When we create a low and break it, price is continuing to the other side, you know. Now, all of these lows, they are like in sequences. Now, what you need to do, you need to always look at the big wave, you know. So for instance, oh, there are lows, there are highs, but what we need to look at, we need to look at this whole thing up to this high as one move, and this whole thing as this low as one move, and then price breaking this high. As you know, we have these bull low, these bull highs and all of that, but what we need to look at is the break of this, you know. So we can clearly see that price was in a downtrend, and then we had the shift. Where the shift of structure happened was the break of this. The break of this high changed structure. As soon as we violated this big violation, changed the structure of this market, and we came back, we consolidated here, took out this high. As soon as we took out this high again, this confirmed the trend in change, you know, a change in trend, sorry. So we can see that price printed a new high. We expected it to come lower. It printed a new high that it actually broke, you know. This confirmed an uptrend still. And here there was an opportunity to trade off this move because price came back into this and went higher. Now, price failed to break this high. That is where things got tricky from this point. As soon as price failed here and it came lower. So in our mind, we know it's still an uptrend, but price is, it's still within this range. Yeah. So we have this low and then we have this high. So as soon as price comes into this, we expect it to go higher and create a new high, and the whole move continues, but price failed. It failed to what? It failed to take out this high. So we are still in this range, you know, and until we take out that range, we are still in an uptrend. Then price came and broke this low. Once this law was violated, the whole situation changed. We are now in a sell. The trend changed from here, you know. Like for instance here, we kept having we kept having higher highs, and until price maintained, we look at the significant ones. Yeah. Until price maintained all of these, we're still in in a downtrend. And as you can see, every time we violated an equivalent low, the low that was responsible for that high. Every time we violated it, price came back to create lower lows, you know. So for instance, this high was based on this, you know, and every time price breaks below this, it confirms. We come back for pullback and continue lower. Now, the low that was responsible for this high was this, you know. We broke it, but now this time round we went higher past this. This is where the whole story changed, you know. This is where the whole story changed. As soon as we took out the supply zone that is responsible for this move, everything changed and price now built up for an uptrend. So I hope that gives you some bit of clarity, you know. So you always look at the high of the move. So for instance, we've taken out this move, and what was the low responsible was this, you know. If price invalidates the zone that created the high, you know, that means that we have a change in trend. Why don't we consider this? Because this law doesn't break any structure, you know. It is not really a law because it didn't break any structure, you know. This is a law because it broke structure here. It is part of the whole uptrend move. So this is a valid law, and it is a safeguard. It's the one safeguarding this trend. Should this be broken, the trend changes, you know. So, and we can see that happen right here. So every time you have a high, I want you to know its low. That low is the one safeguarding that trend. It's the one that, you know, it's the one that validates the trend. And once we come back into the zone, we take advantage of this and then go higher. So once you have known which trend we are in, now how do we take advantage of the trades? How do we know which zone to trade off? Now, for instance, as you can see, we're on the daily time frame on this chart. Yeah. So what you're going to do, for instance, how would we take advantage of this move? The first thing that we want to see price break structure. So as price breaks structure here, we know that we are in an uptrend. So all we have to do is to be patient for price to come back down into the zone. Now, we are going to go on to a higher time frame. For instance, here there are many zones, but which zone are we going to use to trade? We are going to use the zone that was responsible for the break of this structure. Now, we find that on the higher time frame. We go to the weekly chart. So going on to the weekly chart, we can see that we had a strong bullish, you know, a block of a block of a demand zone, you know. We have a demand zone. We have this also, you know. This was also a demand zone, uh, but this was already retested, you know. So sometimes I actually trade both off of these. So we can map out this because this was also a break. We can look at this, you know. The advantage with this, it gives you low risk, low reward. And then we have this entire block. We have this entire block. Now, what you have to do is you go to the lower time frames and refine. So sometimes you can actually have 2, 3 zones. Yeah, but why it's good to trade like this is because your risk is always very low, you know. So we can see that we had in this zone where was the break of structure. So we are going to follow the same principle again. Now we go, this zone was responsible for the break of this structure. Now in this zone, where was break of structure, and in this zone, where was break of structure. So we can see that the first break of structure, the first we have this demand zone, and the zone responsible for the break of structure was right over here. So we had a break of structure there, and we map out that zone. And in this area, we had this as a break of structure. So we can go to the 4 hour and still refine those to have a much more refined zone. So you can see, yeah, this zone was the one responsible for the break of this high, and we can see that it comes down to something as small as this. And then here we can see that the zone is now reduced to this. This is our zone now, you know. If the zone is still big, we can still monitor a change in structure on the lower time frame. So for instance, you want to take a trade only if there is a break of structure here, and you want to get a pullback and take a buy, you know. Yeah. So in this case, we would have taken a trade at the break of this. As soon as we can see that we have this high, we invalidate, we come, we have this sort of a zone, price fails to break, and then it breaks this high. So the break of this high would have given us an entry position for a long, you know. We can look at another example. So going back to the daily time frame, we are going to delete this. So going back to the daily, we can now observe a break of structure. So we have a break of structure here, this low. Now we want to go to the weekly, knowing that okay, we have a change in trend. So we are going to observe which zone was responsible for the break of this. We can see that the most recent zone, the zone that led to the break of structure, was clearly this. If price is to invalidate this zone and go higher and take out these highs, chances are high the trend is going to continue upwards, because now this zone was very critical. Yeah. So mapping out this zone, we go to the daily and we can now start filter out where was the most recent. So we can clearly see that we have this as a supply zone for sales. And if the zone is still too big, you can go to the 4 hour. You can go to the 4 hour and wait for a break of structure. So clearly we can see that we had some bit of uptrend, and until we break it, you know, we break it, wait for a pullback, price didn't come back here, but then we had another break of structure here. So taking the trade here was a good option. Yeah. So we have break of structure here, and you would want to take the trade up these ends, you know, but price doesn't really get there. And what happens? Price breaks against structure here, and you can trade off this this supply, you know, which resulted into a big push to the downside. So sometimes you have to be patient. Just have to make sure your rules are intact, you know. Yeah. So yeah, I've gone over. The first step is to look for direction. So you always look at the chart. You have your time frame. It always works in 3 time frames: the 4 hour, the daily, the weekly. You know, so it can also work for the 4 hour, 1 hour, 4 hour daily. Like for instance, that particular the previous trade that we were on. Let's go to, for instance, you have your break of structure on the 4 hour, then you can date it back. So we have, let's say, a structure break here on the 4 hour. This is a structure break. You are asking yourself, which zone am I going to trade off? Which zone was responsible for the break of structure? So we go to the daily, and looking onto the daily, we can see that we have this is the break of structure. We have some bit of supply here, and then we have a liquid, we have this push here. So in this case, we have two types of zones. We have this here, then we have this up here. There was a big push of this zone. Now we go to the 4 hour and we can refine. So going to the 4 hour, we can refine our zone and wait for a change in structure. So taking the trade off here, yeah, this one was quite tricky to take it here. But what I would do, I would wait for a change in structure. So clearly we can see we have a push into the zone. Price pushes higher. Up until this point, we don't have a change in structure. So we watch this zone. As soon as we get a break of this, because now we have a high, then a higher high, and then a break of structure. So at the break of this structure, we can look for a zone to trade off, and we can see we had an opportunity here. We had an opportunity to take off this. So I wouldn't advise, you can take a maximum of like two opportunities on a zone. Yeah. But most importantly, it's going to require you to be patient until you have clarity. Yeah. So clarity is you want to see a clear, pattern. You know. So clarity is going to be the number one filter you have. Clarity. What do you want to see before you take a trade? So before you take any trade, you must have this pattern very, very clear. A, a break of structure, a pullback, and then into that zone, that's where you take. So some of those things were not clear here. They were not clear here. So even if you're taking a trade on a lower time frame, that pattern must be very, very clear. So before you take a trade, the market has to agree with your terms first. So what is your term? I want to see a break of structure. I want to see a pullback into the zone, and then that's when I'm taking the trade. So that is the number one filter. So the higher time frame is agreeing. Yes, we have a break of structure on the daily. The higher time frame is agreeing. Now the lower time frame also has to agree with the higher time frame. You need to have a break of structure on the 4 hour and on the 1 hour. So once those two agree, then you pull the trigger. So some guys were reaching out to me. I hope this clears the air. But in case you still have any inquiries, you can reach out to me via my number on WhatsApp, and yeah, I can be of help.